Multiple peril policies. Larger companies might purchase a commercial package policy or customize their policies to meet the special risks they face. Uh, risks they face. Commercial multiple and peril policies often purchased by corporation bundle and property boil and machineries crime and generally liabilities coverage. Together, larger firm employ a risk manager to the help determine the company exposure to certain risks. In home business policy, there are survival insurance options designed to address the policy's need for home business. Homeowner policy endorsement, however, may be able to add a simple enrollment or rider to the next existing and homeowner policy to increase coverage. To home policies, someone to whom someone business. Mm. Is an home policy private more and comparative coverage for business equipment and liabilities than a honor to policy endorsement. Policy endorsement. Many insurance companies for insurance policy endorsement. Many insurance companies after insurance policy. Business owner policy BOP, the home business might to be eligible for the business owner policy BOP. She is have the limited of liability requirement, the type of commercial operation it is, and the extent of the of its of promise servicing and processing activities. A BOF like is an home business policy, corporate business policy, and equipment loss of the loss of income, extra expense and liability. However, the BOP private those coverage on a mass boarded scale. Life of insurance basis. Many financial experts consider life insurance to be the concept of sound financial planning. It can be an important tool in the flowing situation, replace income for the department. If people depend on the individual income, life insurance can release that income, and it is person dies. The most common example of this is parents with young child. Insurance to replace income can be especially usually it is government of employer responsible benefit of the serving spouse or domestic partner will be reduced after he is or his die. Pay final expense. Life insurance can pay financial and rural costs, provident and other estimate administration costs, deaths, and medical expense not covered by health insurance. Creates an inheritance for the son. Then those who know other asset to pass on can create an inheritance by buying a life insurance policy and naming their heir and beneficiaries. Pay federal death taxes and state death taxes. Life insurance benefit can be pay state taxes so that here will not have to liquid other assets to attack the similar inherent change in their federal death. Tax rule through January 1, 2001 will be likely lessen the impact of this tax on some people, but some states are offsetting those federal increase will be increases. There are state levels state taxes make significant charitable and contribution. By making a charity the beneficiary of their life insurance policy, individually can the make such the create a source of savings. Sometimes to the life insurance create a cash value that it is not paid out as a death. Benefit can be borrowed or written on the owner request. Some most people makes paying their life insurance policy premium high quality premium high. Furthermore, the interest carried in the tax deferred and tax exempt if his money is paid as a death claim pays to life insurance. There are two major types of life insurance: term and whole life. And term life, their insurance is the simplest form of the life insurance. Its pay only is death occurred during the terms of the policy, which is unusually from one of the 30 years. Most term policy have no other benefit provision. There are two basic types of term life insurance policy: label terms and decreased terms. Label terms means that the death benefit is the sum throughout the duration of the policy. Decreasing term means that is death benefit drops usually is one of the increment over the course of the policy terms. Who life is the permanent insurance paid or death benefit whenever the policy holder. There are three major type of whole life or the permanent life insurance: traditional whole life insurance. Life can be reservable, usually life and other, and variants within each type. In the case of traditional whole life, both the death benefit and the premium and decrease to the stay same level throughout throughout the life of the policy. The cost of per 1,000 of benefit increase as the insured person age, and it is obviously get they are very high when the insurance lives to the 80 and below. The insurance company keeps the premium level by charging and premium that it is early years is the higher than what is the needed to pay claim. Investing that money that then using in the supplement the level premium to help pay the cost of insurance and other people. By law, when there is overpayment reach a certain and amount, they must be available to the policyholder as a case value of his, and he decided not to continue what is the original plan. And the case of value is alternative, not an additional benefit under the policy. In the 1970 and 1980, life insurance company introduced two variations of the traditional whole life product: universal life insurance and variable universal life insurance. Some variant of whole life insurance are decreased development and universal life. Universal life, also known as a adjustable life. The adjustable life allow more the flexibility than traditional whose life policy. The saving vehicles called a cash value amount generally earn a money market rate of interest after money is accompanied in the company. In the policyholder will be also in the policyholder will be also have the opinion and alternative premium payment, providing there are enough money is the account of cover the cost. Variable life policy and combined death protection with a saving account that can be invested in a strong bound and money a market mutual fund. The value of the policy may grow more quickly, but involves more risks. Is investment do not perform the well, the cash value and death benefit may decrease. Some policies, however, guarantee that the death benefit will be not fall below a minimum level. Valuable over versus life. This type of policy combines the features of the variable and universal life policy, including the investment risks and rewarded and characteristics of valuable life insurance, and the ability to adjust premium and the benefit the characteristics of universal life insurance. Annuities basic. Annuities are financial product and intended to enhance a requirement society, and an annuation is the agreement for an person or organization to pay another a series of payment, usually the term and annuity related in a contract between in the industrial and the life insurance company. There are many categories are annuities. They can be classified by natural of the underlying investment, fixed or variable primary purchase accommodation or payout. Natural or payout commitment, fixed period, fixed period amount or amount of lifetime taxes such as and qualified or non-qualified premium payment arrangement, single premium or flexible premium, and amenity can be classified as a survival of the category at once. For example, an individual might to be a non-qualified signal premium deferred variable annuity is general annuity have the following feature. Protection from creditors, people who own them the immediately and immunity. It is then there are recovering money from an insurance company or afford some protection from a creditor. Generally, the most that creditors can access in the payment as they are made, since the money in the immunity owner give the insurance company now belong to the company. Some is suitable and court decision also protect some or all of the payment from those annuity. A varieties of investment option. Many annuity company offer an acquisition of the investment option. For example, individually can invest in a fixed annuity that credits a specialty interest rate similar to bank certified to a deposit. If may buy a variable annuity, their money is can be invested in the extra bonds or bonds or mutual fund. Is the recent in the recent year, annuity company have created various as type of float that limit in the extended investment decline from an increasing reference point. Lifetime income. A lifetime immediately annuity convert an investment into a stream of pay, means that the last until the annuity owner dies. In concept, the payment come from that the pocket, the originally investment earning, and the money from pool of the people in the investor or a group who do not live as long as a actuarial table forest. The pooling is unique to immunity, and there is what enables annuity and annuity companies to be able to grant a life income. benefit of here, there is a common and apprehension that if an individual start an immediately lifetime immunity and dies some after that, the insurance company keeps all of investment in the immunity that prevent the situation individually can buy a granted period. What is the immediate immunity? A granted period community the insurance company to continue payment after the owner die to one or insurance company to the community payment after the owner die to one or more designated beneficiary the payment continue. The payment continue to the end of started guarantee period and usually 10 or 20 years measure from the when the owner started receiving the immunity payment. Moreover, immunity benefit that pass to beneficiary do not throw and probability are not government by the immunity owner well. Type of immunities. There are two major types of immunity: fixed and variable. Fixed immunity guarantee and the principal and the minimum rate of interest. Generally, interest, credit, and payment made from the fixed immunity are based on rate declared by the company, which can charge only yearly. Fixed immunity are considered generally accounting asset. In contrast, variable immunity account value of the payment are based one, the performance of the separate investment portfolio. Thus, there are value may fluctuate daily. Variable annuities are considered separate account asset. There are a variety of fixed annuity and variable annuities. One example, the equity indexed annuity is a hybrid for the feature of fixed and variable annuity. It carried a minimum rate of interest just as other fixed annuity do, but its value is also based on the performance of a specified stock index. US usually computed as a fraction of the index total return. In December 2008, the Securities and Exchange Commission voted in and reclassify index annuities. Amenities can also be classified by marketing channel in no word whether they are a sold out group or individually. Amenities can be deferred on immediately. The deferred amenities generally accumulated asset over a long period to time with otherwise usually as a single sum as a income payment become as requirement immediately and amenities also prefer to the convert a some lump sum payment into the stream in the income that the policyholder begin to receive right away. Long-term care insurance basic. Long-term care insurance pays that the service to help individuals who are the unable to perform certain activities to daily living without assistance or require and supervision in the constitutionally and infections such an Alzheimer's disease. Humming. This is the class of the reading exam. I in the reading class. It is a very difficult work. It is a long time. Long time. সময় ব্যয় করা লাগে এডিটিং সুন্দর এডিটিং একটা ভালো এটা অবশ্যই এর আগের থেকে এগুলো করা হয়নি 12 নয় এটা আমরা 12 দেবো এটা না 15 দেবো নেক্সট কাজে এটা দেওয়া হয়েছে 12 এটা The PAST policy paid the for case in nursing home, assisted living facility, or at homes benefit are typically and expressed in daily amounts. What a lifetime maximum sum policy pay half as the must pay per the day of the home care of the nursing home care. Other payers some amount or have a pool or the benefit that they can be as needed. Criteria for the beginners of the payment, the policy should be stated and the various conditions that must be met. They can including and the inability to perform to or their specific activities or daily living without help. This including bathing, dressing, eating, and toiletry, and is a transpiration or being able to move from place to place or between a bed and a chair and cognitive and impairment. Most policy cover stroke and is a Alzheimer and is a Parkinson disease, but of the problem of the mental and incapacity may be included. Most policy have a warrant period and a limited period. That is the period. That is period the meals begin is when the individual first needed long-term care and the last as long as the policy provided. During the waiting period for the policy, we will not pay benefit. The policy pay only for expense that occur after the waiting period in over. In the policyholder continues to need care in general. The longer the waiting period, the lower the premium for the long-term care policy. Benefit period of the long-term care may range from 2 years to lifetime. Premium can be kept down and the electing coverage for there are 4 years longer than the average nursing home stay. Instead of a lifetime, most long-term care policy pay on is a reimbursement and basis after to the policy limit. In other words, it is policy has a $150 per day benefit, but the policyholder spend only 130 per day for a home term for a home term loan can provided the policy will pay only 130. The extra dollar will be in some policy go to in the pool of unused fund that is can be used to extend it that the length of the term and which is the policy will pay benefit. Other policy pay on an identity basis using the same example as above. An identity policy would pay 150 per day as long as insured need the receive long-term care service regarding of the actually outlay. Inflation protection is an important feature and especially for the people under the age of 65 who are the buying benefit that they may not use to 20 years or more. A good inflation provision and compound benefit at 50% a year. Without inflation protection, even 3% annual inflation over 24 years reduce the purchasing power of a $150 daily benefit to the equipment and $75. Six other informant policy prevailing an elimination period under the policy if is the insurer that qualify long-term care expenses one of the day during a 7 day period he is the candidate with having satisfied 7 days toward the limited period the time between an injury and the receipt of the payment. This type of provision reflect the way some home and infant deliver someday to the professional and someday of family member. However, from premium, this provision ensures that no further premium are due once of the policyholder start to the receive benefit. Third-party notification. This provision and stipulated that the relative friends or professional advisor will be notified if the policyholder forget to pay a premium. Their beneficiary keep a larger amount of insurance in force in the policyholder less the coverage left. The provision is required by some states. This provision ensures that maximum benefit are put back in place if the policyholder receives benefit for a time then recovers and goes to for a satisfied period without receiving benefit. Disabling insuring after millions of Americans each year disability insurance which complement health insurance. Health replacement loss in income is an individual in unable to work due to disability. There are three basic ways to replace income: employer paid and disability insurance. This is required to the most states. Most employer provided some short-term sick leave. May larger employer provided long-term disability coverage as well, typically with benefit up to 60% of salary lasting for a period of up to 5 years until the age of 65 and in some cases extend for the life. Social security disability benefit. This is paid to worker whose disability is expected to the last of least 12 months and it is the subject that no gainful and employment can be expected. Individually disability come and insurance policy. Other limited replacement into the available for the worker under some curriculum circumstance of the worker and compensation if you are the injury of the illness and the job related. Auto insurance if is a disability reserved for an auto accident on the department of the variant appearance for most workers, even those who some employer paid it cover an individual disability income policy in the best way to ensure an adequate income in the event of disability. Worker who buy a private disability income policy can expected to the replace from 50% and 70% of income. Disability benefit paid out of the by individual disability policy are not taxes. Benefit from employer paid policy are subject to income tax. Type of disability insurance. There are two type of disability policies. So it is short-term disability and long-term disability. Short-term policies can be waiting period of 0 to 14 days with a maximum benefit period no longer than 2 years. 2 years for a few years to the lifetime. 2 years. Long-term policy have a waiting period to survival or to survival with a maximum benefit period ranging from a few years of the lifetime. Disability policies have two different protection features: non-capability and granted and renewable. Non-cancelable means that the policy cannot be cancelled by the insurance company except for non-payment of premium. This gives the policyholder the right of renew the policy every year without in the increase in the premium or the reduction in benefit. Granted renewable gives the policyholder a right to the renew the policy with the same benefit and not have to policy cancelled by the company. However, the insurer has the right to the increase premiums and the long does not for the policyholder is the same rating class. Additional purchase option. The insurance company give the policyholder the right to buy additional insurance at a later coordination of benefit. The amount of benefit a policyholder receives from the insurance company is dependent on the benefit they receive because of the disability. The policy specifies a target amount and the policyholder with receipt from the policy combined and will make up to the difference not paid by the other policy. The COLA insurance eligibility and benefits over the based on the increased cost of living and measured by the consumer price index. Policyholder we will pay or higher premium if they select the COLA. The provision allow worker to return allowed to return to the work part-time, collecting part of their parting their salaries and receiving a partial disability payment if they are still and particularly disabled return of premium. This provision requires the insurance company to refund a part of the premium if no claims are made of the specific period of time declared in the policy. The causes means that the policyholder does not have to pay premium on the policy after he is or the disabled for 90 days. Factor affecting the choices of a disability policy. Definition of disability: some policy pay benefit in worker are unable to perform the customary duties of their own occupation. Their pay only to worker unable to perform any job situation for their level or education and experience. Some policies define and disability in terms of worker occupation for an intermediate period of 2 or 3 years, and they are continue to pay beneficiary only if they are unable to perform any occupation. Own occupation policies are more desirable but more expensive. Aggressive. The benefit period is the amount of time policyholder will receive monthly benefit during their lifetime. Expert usually recommendation that the policy pay benefit until to the list of 65, at which point social security disability will take over, when people may consider buying a policy offering lifetime benefits because it will still be relatively and expensively. There is replacement percentage. A policy that will replacement from 60% or 70% of total eligibility earning in advisable. A higher replacement percentage, if available, is more expensive. Other source of income should be evaluated before deciding how much disability coverage is needed. Coverage for disability and resulting from either accidentally injury or illness. An accident only policy is less expensive but does not provide this an equipment and professional eligibility. Most accident and illness coverage should be purchased. A cost of living increase in benefit. A cost of living increase in benefit policy. Minimum policy may not pay benefit for a decided or more, and should keep pace with increase in the cost of living. Some companies also after indexes benefit keeping pace of the inflation of the benefit payment begins. A policy paying and residential or a partial benefit. This type of policy to available so that people can work part-time and still receive the benefit, making up to lost income. A standard feature is some politics and added by a rider to other, and residential benefit policy pays partial benefit based on loss of the income without an intermediate period to total disability. Transaction benefits offered by the some companies is can offset financial loss during a post disability period of rebuilding a business or professional practice. Ongoing coverage: a non-considerable policy will continue to force as long as premium are paid. Neither but the benefit nor of the premium can change. A granted renewable policy keeps the some benefit must may cost of the more over time. Since the insurance can increase the premium, it is the increase for an entire class of policyholder. Financial stability: check the financial stability in insured through as an agent or the rating from the capabilities and other risks. Financial and options. Traditionally, business are other organizations have handled risk by the transformation rights in the insurance company through the purchase of an insurance policy, or alternatively by the retain the risks and allocating from the meeting exported losses. Through an arrangement known and the self insurance, in which losses through and in the arrangement known as the self insurance, in which from retained rather than transformer risks. During the liability crisis for the 1980s, when business had troubles obtaining some type of commercial insurance coverage, new machinerism for transfer in risk development facilities. কে? কিছু না, এখানে কিছু হয়নি।